Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Tesla unveils its next generation of self-driving technology, with CEO Elon Musk calling its hardware the, quote, best chip in the world. But will it live up to the hype on the road? Plus, Samsung has delayed the launch of its first foldable smartphone after reports of screen failures by reviewers. Just how big of a setback is this? And our exclusive conversation with Grab co-founder Huiling Tan. Can the company live up to its own aspirations to become the super app of Asia? But first, to our top story. Tesla's Investor Day kicking off on Monday, and CEO Elon Musk seemed most excited about Tesla's self-driving future. He singled out a Tesla-designed chip that he claims will make this a reality, calling it the best chip in the world.
Not best by a small margin, best by a huge margin. It's in the cars right now. All Teslas being produced right now have this computer. We switched over from the NVIDIA solution for S and X about a month ago, and we switched over Model 3 about 10 days ago. All cars being produced have all the hardware necessary, compute and otherwise, for full self-driving.
To discuss, I want to bring in Bloomberg Auto's editor, Craig Trudell, in New York. So, Craig, Musk himself addresses the skepticism around calling this the best chip in the world, saying, how can a company that's never designed a chip design the best chip in the world? What is the answer to that?
Yeah, we knew that Tesla was doing this, and we knew that they were going to swap out NVIDIA. I think the surprise here is the timing of this happening, and just how much Musk is willing to go, how far he's willing to go to kind of talk about its bona fides. And in very Muskian fashion, he's talking about it being the best ever. We'll sort of see, and investors may actually get a chance to sort of put this through their paces this afternoon, because after these presentations that have been going on for quite a while now, the investors that are in the room at Tesla headquarters in Palo Alto are going to do some test drives. So we may get some reviews as to just how well it performs.
So those test drives happening later today. Now, the analysts who are there don't have rave reviews. I mean, so far they've said they're underwhelmed. One analyst from Roth Capital said that it's boring, which, anything associated with Elon Musk, you don't normally use the word boring. Why are they so skeptical about what they learned today?
Well, I think it didn't hurt that they started about 40 minutes late, and then the beginning of the presentation was very, very technical. To Tesla's credit, it does feel like they've warmed up a little bit. No sooner did Musk acknowledge that he's sometimes a little bit late in promising things and actually then delivering them. He made a proclamation just in the last few minutes about Tesla Network, and this is a concept that he talked about a couple of years ago in his Master Plan Part 2, but he talked about this in this afternoon's presentation. He talked about the idea of this being sort of a hybrid of an Uber and Airbnb-like model, where like Uber, it's a way to get around, and like Airbnb, whereas you put your house or your apartment up on Airbnb and it helps you sort of defray the cost of your real estate, you basically do the same with your car. And Musk has talked about doing that with robo-taxis, so with fully self-driving vehicles able to drive themselves. He says he thinks he'll be able to do this by the end of next year, which seems, again, like a very Muskian timeline that we'll see if he can actually pull off.
He's always aggressive with his timelines. Now, Tesla, of course, already has the autopilot feature. So what is he promising that is new? I mean, a fully fledged self-driving Tesla?
Yeah, I think he's talked about having the hardware necessary for full self-driving before. I think he's now talking about the hardware being even better, sort of new and improved, with the best computing power out there, but also walking investors through some of the advancements that they've made on the software side as well, and that giving them the capability to actually put features out there, enable people eventually to be able to be sort of out of the loop, and then after that also be able to convince regulators that drivers can basically stop paying attention. All of this, again, as you put it, is a bold set of statements, and we'll see if it's actually something that Tesla's able to pull off. He did quantify that this won't be something that we'll see on streets all over the place. He talked about, in sort of a select jurisdiction by sometime late next year, but again, we'll see.
The timing is also interesting, of course, given that Tesla's earnings results are going to be coming out later this week. Now, I do have to ask you about the story coming out of Shanghai, a video that has surfaced on social media of a Tesla parked in a covered parking garage that starts to smoke from beneath the car, and within seconds, it bursts into flames. I mean, we're watching this video now. It is absolutely shocking. We still, of course, have to verify the origin of this video, but Tesla has said they sent a team to Shanghai to investigate. What's happening here?
I don't know, and I don't know that Tesla knows at this point. As you mentioned, they've sent a team to investigate. We've seen in the past where battery electric vehicles, if they've driven over something and sort of punctured the battery, that it's not a situation where they just sort of immediately burst into flames. But lithium burns very intensely, and you can see for yourself with that video just how much there's sort of a fire hazard when something goes awry. But we don't know at this point what happened, whether this was a vehicle that was driven over something and the battery was punctured. A few years ago, Tesla had an incident along those lines and sort of beefed up the steel casing around the battery to prevent against these sorts of things happening. We should also acknowledge that gasoline-powered vehicles are obviously combustible as well, but certainly because Tesla is still such a hot commodity and a hot name, and electric vehicles are so ascendant in China especially, this is not a good look for Tesla, and it's something that they have to quickly get to the bottom of, and sort of put people at ease that this is not something that happens all the time, and perhaps was just an anomaly here. Well,
we're going to bring you all the latest developments as they try to get to the bottom of it. I also want to ask you about the newly contentious relationship between Musk and Panasonic, which makes the lithium-ion batteries that go in Teslas. This has become now a sort of public feud where Musk is saying that Panasonic isn't producing batteries fast enough, that it's slowing down Model 3 production, whereas Panasonic seems to be intentionally hitting the brakes on production of these batteries, and we don't know for sure why. What is happening here?
Yeah, Dana Hull's story on this is really excellent. So she points out in her story that this was always sort of an odd couple, right? Where you have Tesla, who's led by this sort of mad genius, move fast Silicon Valley ethos, paired with Panasonic, that is this more than century-old, very conservative, very deliberate Japanese company. They've been in the Gigafactory for a couple of years now out in Nevada, and it's always been a little bit curious that these two ended up together, but it's sort of surfaced recently some of the tensions that they've had, where obviously Tesla, it's no secret, had serious production issues, even into sort of midway through last year. And Musk very recently sort of throwing Panasonic under the bus, it felt like, by talking about how Panasonic's battery lines were holding Model 3 production back. And it seemed to be a sort of case of making excuses for Tesla having some real sort of operational issues lately. And Tesla's tried to sort of put to rest this notion that they have demand concerns, but obviously Wall Street has not really taken Tesla at its word from that regard. The shares are down about 20% this year.
All right, lots to continue to follow. Our own Craig Trudell, thank you so much for those updates. Coming up, Sri Lanka shuts down social media in the wake of a series of horrific bombings. How Facebook and YouTube are feeling the weight of the world next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. The Sri Lankan government has shut down social media and messaging channels in the wake of a devastating Easter attack that killed nearly 300 people. Officials are hoping to stop the flow of possible misinformation and hate speech that's been known to spread on social networks following violent attacks. The shuttered platforms include Facebook, WhatsApp, Instagram, YouTube, and more. This isn't the first time a country has taken this measure to combat hate speech, but the question is, will it work? Joining us to discuss in Washington, we've got Ivan Singal, the executive editor of Global Voices, a digital advocacy nonprofit, and here with me in the studio, Bloomberg senior executive editor Brad Stone. So, Ivan, you've been out there condemning some of the behavior of these companies. You say this is an indictment of social media. Why?
Well, it's not just an indictment of social media. It is a part of. It is a moment in a long trend of lack of responsiveness to the requests of communities that have, especially the non-English language communities, that have seen misinformation, disinformation, and hate speech and harassment happening in their online platforms and have not been able to get an adequate response from the social media companies to address their concerns in a timely manner. And that was true in the Sri Lankan case as well.
Give us some examples of where you've seen this happen elsewhere. You know, we know in India, for example, WhatsApp has been blamed for the spread of viral rumors that have led to fresh waves of violence. But, you know, tell us a little bit more about how, you know, in non-English language communities, you can see these tools used for ill.
So, I should say at the very beginning that this isn't only about the tool, it's an integration of how the tools are used and currents and trends that are happening in communities and countries around the world. It is not a determined determined thing that the technology is the only problem. However, we are seeing in many places around the world, we see an increase in harassment, in hate speech, incitement, and in extremist language. And the social media platforms are, in the main, not designed to handle that, the restriction of different kinds of speech. They are especially challenged when it's happening in languages other than the ones that they are primarily monitoring for. So they need to build up teams that can actually proactively respond in a timely manner to the appearance of threats and build content moderation systems that work accordingly. Myanmar is another great example, and Bangladesh as well.
Right, and they're even challenged, obviously, in English-speaking communities, as we have learned. Brad, Facebook did release a statement to us. They said, our hearts go out to the victims, their families, the community affected by this horrendous act. Teams from across Facebook have been working to support first responders and law enforcement, as well as identify and remove content which violates our standards. We're aware of the government's statement regarding the temporary blocking of social media platforms. People rely on our services to communicate with their loved ones, and we are committed to maintaining our services and helping the community and the country during this tragic time. Now, what's interesting is there's no evidence that these attacks were spun up on social media or because of social media. So there's a sort of preemptive, pre-crime aspect here. What do you make of that? Right.
Well, I mean, I think Ivan put his finger on it, which is there's just a lack of trust around these social networks and the kind of behavior and sort of viral hatreds they're capable of inciting. I mean, look, you know, Facebook wants to be seen as part of the solution, right? Over the last few years, they've rolled out things like Safety Check to allow people to tell their family and friends that they're okay, emergency alerts to help local governments communicate, and yet, you know, more often than not, they're being used to foment hatreds, and we've seen it. Yeah, we've seen it in India and other countries on the subcontinent. So I think, you know, from a numbers perspective, you know, this is a small part of Facebook's global business, but you know, it's a terrible symbol of how, you know, instead of helping, you know, in these kinds of crises, they're often viewed quite skeptically.
Ivan, can you give us some examples of how after attacks like this, you can see the events then again spun up on social media, further spread of hate, further spread of misinformation, even if they weren't necessarily involved in the attack itself?
I want to say before that, I think it's really important to note that communities in Sri Lanka themselves are opposed to this ban. So independent journalists, advocates, researchers are not in favor of this. They're very frustrated by the fact that it's happened, and they find it to be ineffective in practice. And this goes to your question.
Why are they frustrated?
Because for them, social media platforms are an essential element in communications. Because for a long history, Sri Lanka's history for the past 20 years, independent, non-mainstream journalism, digital platforms have been essential to a diversity of voices and perspectives, and that's still true today. So when social media platforms are blocked, it decreases their ability to do their work. And also, these kinds of blocks are ineffective. It's very easy to install a VPN and get around them. And we saw when the block happened, the Sri Lankan government blocked WhatsApp and Facebook and Viber in March 2018 following communal violence. And researchers found that within a matter of a day or two, something like 50% of Facebook's traffic was back. So this hurts communities that have less knowledge, less resources, or fewer resources to actually be able to build workarounds, but it doesn't hurt people who have the resources or who are especially motivated to be online.
So, Brad, none of this is black and white, right? Then, what is the right?
Well, I want to add to Ivan's point, which is there's something very unsettling about all this, because there's, of course, a very fine line between shutting down some of these social networking tools, preventing misinformation and mob behavior, and a government, an authoritarian government, or even a democratically elected one, after an emergency, shutting down these tools to prevent, criticism, to prevent opposition parties from making themselves heard, to prevent the free dissemination of news and information. So, it's a troubling development.
Either way, big questions for these social media platforms, no matter what. Brad Stone, our senior executive editor, Ivan Sigel of Global Voices, thank you both. Coming up, after 8 years of development, Samsung finally unveiled its foldable smartphone, but customers won't be able to buy it just yet. We'll talk about what's keeping the product from the market next. This is Bloomberg. Samsung has delayed the launch of its first foldable smartphone. After several reports of screen failures on test versions of the Galaxy Fold, Samsung postponed its April 26 release without giving a new date. In a statement, the company said, while many reviewers shared with us the vast potential they see, some also showed us how the device needs further improvements that could ensure the best possible user experience. To fully evaluate this feedback and run further internal tests, we've decided to delay the release of the Galaxy Fold and plan to announce the release date in coming weeks. Joining us from Boston to discuss, IDC Vice President Ryan Reith and our very own Mark Gurman. And of course, Mark, you yourself saw problems with the Galaxy Fold, a tear at the hinge, the screen going black. Talk to us about how this story has developed through the weekend and what else has popped up.
So I actually brought a prop with me today. This is the phone, and this is going to be probably the last time you're going to see me with this on air for a while until they relaunch this thing, because they are picking it up tomorrow morning. But I received the phone last Monday, and it has this plastic film on it that looks like the type of film that you would get on any other phone, even Samsung phones, iPhones, TVs, and tablets that you remove before using. Typical, user experience. But about 48 hours after removing that plastic sheet, the phone was completely dead. So the left side of the screen, inside the phone, this screen right here, one side went out completely after about a day. Then the next day it was about 75% dead across the whole thing. By Wednesday morning, it was completely gone. And in my book, the difference between a $2,000 phone working and not working should not be a thin piece of plastic.
Ryan, what's your take on this?
I think I agree with Mark, what he said. I mean, that's a big starting point right there. But I think overall, this is a big sign to me that the industry wasn't ready for this form factor, to be honest. I think this is a big issue for Samsung in general because obviously their name's attached to this, but I think it's a bigger issue for the segment and the category in general. overall. So, they're trying to launch something new where, to be honest, there really wasn't consumer demand for. No consumers were really waiting for this, in my opinion. And so, it's a hiccup in the road towards a new sort of product category. And there's a lot that's untold at this point. We're waiting to see what these things will look like when they actually do work. But overall, I think, to be honest, I think most of these companies, Samsung first, but I think there's a few others right behind them, were rushing to market with these devices because they want to have that first or pretty close to first in a new product category, again, that I don't see the initial demand for.
Now, Mark, we've had other analysts on the show, like Bob O'Donnell of Technalysis, who are very excited about this foldable phone. Do you see any evidence that this is a product that consumers want?
Well, the problem with this incarnation is that it's basically both a phone and a tablet, and you can switch between the two modes. The problem is it's not a very good phone, and it's not a very good tablet. And if you read my review, I go into the different details as to why it's not very good at either. And so basically you're getting, for $2,000, a bad tablet and a bad phone. For that type of money, you can get an iPad, an iPhone, and even an Apple Watch on top of that, and still have a little bit of cash left over. Likewise, if you're in the Samsung ecosystem, you could do the same. You could buy a Samsung tablet, you can buy a Samsung S10 Plus, and have $750 cash left over. So there's really not a user proposition for buying this thing at this point, especially because of how bad it is both on the hardware and software front.
Well, when you put it that way, it's sort of hard to argue, Ryan. Samsung had issues a couple of years ago with the Note 7, the battery catching fire. I mean, how bad is this in the context of the broader product lineup?
So personally, I would say that the Note 7 issue was much worse for Samsung because there were actual customers that were waiting for that product, right? They did have a loyal, and they still do have a very loyal Note user base that were waiting for the Note 7 when it came out, and many bought them, and they experienced those issues, unfortunately. So I just don't see that there's any actual consumers that have been waiting for this product. I'm pretty sure that most don't even know that these products were ready to launch. And if you look at the marketing campaigns that Samsung alone has done around their new products over the past literally 10 years, I would say this is probably as minimal as possible in terms of marketing. They've got, not only did they just launch the S10 lineup, but they've got the S10 5G coming and so forth. So to me, this felt rushed. It felt very un-Samsung-like in the sense that, yes, they've gone through issues in the past, but I would almost separate those issues, not in defense of them, but I think they're very different in nature. I felt like this was a sort of taking too many new technologies and really trying to get them out to market really quickly, whereas they had more time to sort of wait on that.
Ryan, we'll have to leave it there. Ryan Reith of IDC, Bloomberg's Mark Gurman. We'll be watching how this one develops. Coming up, Southeast Asia's ride-hailing leader Grab wants to become a super app. We'll tell you how far they are to getting there. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. In March, Southeast Asia's leading ride-hailer, Grab, secured about $1.5 billion from SoftBank's Vision Fund, bringing its latest round of funding to a total of $4.5 billion. Now the company says it's supersizing the round and plans to raise an additional $2 billion this year. This as it goes head-to-head with rival Gojek and aims to expand its services beyond ride-hailing. Joining us to discuss, Grab co-founder Huiling Tan. It's great to have you back here in the studio.
Thanks for having me again, Emily.
So last time you were here, we talked about the vision to become a super app. How much progress have you made towards that since we last spoke?
Great question. In many senses, we are already Southeast Asia's everyday super app. We've seen tremendous traction. In 2018 alone, we grew our revenue by more than 2x. And our growth verticals that became the core pillars of our super app have been growing tremendously. Grab Food, our food delivery service, grew more than 45 times in 2018. Our payments and financial services as well, Grab Financial grew more than 5 times in the same year as well. So in many different ways, we are already Southeast Asia's everyday super app.
And I mean, beyond those services, you're talking about parcel delivery, content and digital payments, on-demand video, digital healthcare. I mean, how would you describe this, you know, is it like Amazon for everything?
No, it's Grab for Southeast Asia. And I think it's really important to frame why we're doing certain things with partners as part of the Grab platform partnership strategy. So let me frame this, right? The core services, transport, food, payments, and financial services. Those are things that are growing healthily and that we're leading end to end. Now, the things that you talked about, news, groceries, videos, content, those are things that we're doing in partnership with other global players like Booking.com, Microsoft, and Ping An Good Doctor for healthcare, because we believe they have net new technology and operational assets that they can bring to Southeast Asia.
So you've already raised $4.5 billion. You want to raise $2 billion more. Why?
We've seen tremendous growth and interest from global, regional, and local partners. Because of this, we said this is actually a great time for us to reinvest back into Southeast Asia, going, from taking transportation from zero to the leading ride-hailing platform, and now moving into food, payments, and more. Now, this additional $2 billion is going to be used, $6.5 billion is going to be used for particularly reinvesting back into food, payments and financial services, as I mentioned, and doubling down in our largest and fastest growing market, Indonesia.
I want to talk to you about the regional breakdown that you're seeing. I mean, what is the evidence of traction, let's say in Indonesia, for example?
So, for example, in Indonesia, we're already part of the largest payments wallets with our partnership with OVO. Food as well has been growing tremendously. Last year alone, we grew more than 10 times there. And of course, in ride-hailing and transport, we're already the largest player with 60-70+% market share.
Now, you mentioned you doubled revenue in 2018. I know you in the past said you were on target to surpass $1 billion. Did you surpass $1 billion in revenue?
We did. We have a history of executing on our plans well. In fact, just last month, Anthony, my co-founder, was in Tokyo with Masa-san. And Masa was sharing how happy he was with our progress and the fact that he was recommitting $1.5 billion more as part of this round, and that he wanted to provide us with unlimited support going forward.
Right. He said he wanted to provide unlimited support to power your growth. Does that also mean unlimited access to capital?
Of course, he just added $1.5 billion to our resource and bank account, so thank you very much.
So he's not going to give you the next $2 billion?
He has already contributed, as part of course, SoftBank, approximately $3 billion to Grab's growth to date. We've had a long-standing relationship with him since, I think, about 2014. And the reason why this is important is because it shows that we've continued to be able to execute well. And as you know, Masa-san has big, ambitious plans. We do too. And we, together with SoftBank, other recent financial and strategic investors like Toyota, Hyundai, Microsoft, Booking, are eager to continue executing on that vision and trajectory.
Now, every time a founder takes on new funding, there are new expectations, and founders debate, can I live up to those expectations? Do you have any concerns about taking on this much capital and then delivering those returns?
No. and the reason for that is because I think this is not the first time that we've been doing a significant fundraising round. Yeah. It's not the first time that we've put great big ambitions ahead of us. And because of a couple of things, right? That historical execution trajectory where we've always over-executed. Also the fact that our partners can now see the future of Southeast Asia being a potential that no one has ever seen before. Globally, Chinese players are trying to enter the market. US players are trying to enter the market as well. And in Southeast Asia, Grab is the go-to partner, right? In the region, we've actually raised more than 6 times more capital than any alternative player. And it's because of that historical trajectory and that future potential that we are sharing as part of the Grab platform super app strategy, and the fact that we've already been executing well on it in less than a year, I think that's why folks continue to come on board and why we're actually excited about the future.
Now, you've also said you're on track to double your 2018 revenue in 2019. Is that still the case?
We are looking for all sorts of top-line growth, right? By the end of the year, we actually expect to be 4 times larger than the nearest alternative player in the region, right? We're also looking to use that investment money for at least 6 investments or acquisitions, because we're looking for partners that can help us accelerate the growth of the super app strategy.
You've been a very acquisitive company, as has your competitor, Gojek. Where will we see you make more acquisitions? In what areas? In what regions?
The things that we've been doing with acquisitions and investments today is to look for partners that are mutually aligned that can accelerate our underlying platform. I'll give you an example of Kudo that happened not too long ago. They were the largest agent distribution platform in Indonesia, where they were present in more than 500 cities. And with that presence, they enabled us to help launch new cities and services in a few hundred more locations in Indonesia very, very quickly at very low cost. So those types of partners which can help us boost, our operating efficiency, that can help us bring strategic values in ways we would have taken a lot of time to do so on our own, are other players that we're hoping to invest in, and particularly in financial services, food, and the super app platform.
Now, we've seen Lyft go public. We've seen Uber's financials as they prepare to go public. They're losing a lot of money. I mean, Lyft is losing half as much money as it's making. What do your profits look like? I mean, can you break even?
So good news is we're already profitable in some of our more mature markets and regions, particularly in transport.
Which regions?
I can't say specifically, but what I can say is for those regions, things are going well. And beyond that, there is always a very clear line of sight to long-term profitability before we decide to start any new business. And this year particularly, especially with the large round that we just raised, of course, we're going to be increasing investments because the time is right. The time is now. Everybody sees that, and that's what we're heavily geared towards right now.
Now, Uber has invested in Grab, has a seat on the board. You don't have a stake in Uber. Why not?
Well, we're very focused on our markets. We're very focused on our customers. The relationship with Dara and his team has been tremendous. We've been great partners. He's been a great board member. We've learned a lot from them, and they've learned a lot from us. And to be honest, we're looking forward to that relationship continuing in bigger, better ways. What we look for when we think about partners and who to invest in are folks that want and can bring value to the underlying Grab platform in two dimensions. One is, of course, value from operational value, strategic value, financial value. Second, value in terms of ethical, cultural, vision value. And we found that tremendously in a partner in Uber, and of course, they've invested a lot in it.
So, using Uber as an example, how might Uber become a better partner in bigger and better ways?
Keep posted. When we have anything to launch and announce, you'll be one of the first to know.
So, and I know I asked you this last time. I feel like I need to ask again. Uber is obviously a very ambitious company. They've certainly had to pull back in some of the regions that they have expanded into. But do you worry about running into them in certain territories where you are also trying to expand?
No, because we are very, very focused on Southeast Asia.
Yeah.
There is no reason to go outside of Southeast Asia, to be honest. Everybody's trying to come in right now. It's a high growth
so you're not
potential.
going global. You're very focused on that region. And
We're not.
So.
We're not going global operationally, but at the same time, we've always taken a global approach to talent. What do I mean by this? We have 8 operational offices in Southeast Asia, but we have 3 outside. One here in the States in Seattle, because we have one R&D center here, and 2 additional R&D centers, one in China, Beijing, and the last one in Bangalore, India. So we take a global approach to solving Southeast Asia's local problems.
So any new initiatives we can watch for when it comes to Grab Financial Services or Grab Food?
Fantastic question. So by the end of this year, we're actually targeted to be Southeast Asia's largest micro-insurer, and from a fintech perspective, the largest loan book as well in Southeast Asia. This is all happening as we speak, so keep posted. On the food front as well, we're expected to be the largest revenue contributor in Southeast Asia. We are already the only regional food provider in 6 countries. We are also already the only player in Southeast Asia that has 6 payments e-wallet licenses. So that's what I mean by we are already Southeast Asia's, everyday super app. I would love if we're no longer referred to as, the ride-hailing champions of Southeast Asia, because that world has changed.
Okay,
overnight.
so let's say we have this conversation again in a year, which I hope we will. Where will Grab be then?
We will have executed on all the commitments that we just talked about, and we will be sharing what's next in the next year. What do I think about, especially beyond food, financial services, and transport? We're entering exciting areas which we've always wanted to contribute back to. For example, healthcare with Ping An Good Doctor. We have a partnership with them, and we're rolling and going to be scaling that out. So keep posted on that. We also have existing partnerships with Zhong'an. They're an insurance provider from China as well. Great technology, great operational know-how. We started rolling out some of the partnership and microinsurance technologies that they're bringing to the table that we'll be seeing more of and getting into millions of hands, right? So look out for more of these exciting partnerships with global players, and look out for more exciting growth numbers.
All right. Grab co-founder Hui-Ling Tan, good to have you back here on the show. Thank you so much
for
stopping by. I'll see you in a year, if not sooner. Okay, Huawei is reporting first quarter sales jumped 39% from a year earlier to $27 billion. The company also reported it shipped up to 59 million smartphones and more than 70,000 5G base stations to markets around the globe. Huawei is pushing back against efforts by the U.S. government to stop other nations using its technology. So far, Australia has banned it outright, and Japan said it won't be allowed to participate in the rollout of new networks. Still ahead, TikTok has turned into one of the most popular apps in China. We will take a closer look at the company behind it. Next, this is Bloomberg. Chinese regulators sketched out new requirements for video game approvals. Among the new rules, publishers will now have to submit more information on measures to curb addiction to detailed scripts. Companies like Tencent and NetEase have previously struggled with the months-long crackdown. Well, ByteDance, the company behind hit video app TikTok, has achieved extraordinary success in its home country, China, with an audience younger than Facebook. Now, it wants to be the next global internet titan. Take a look.
Mwah. These funny, cute, and sometimes silly videos are from TikTok, one of the most popular social video apps in the world. Over 500 million people, mostly teenagers and millennials, use TikTok and its Chinese version Douyin to make and share short-form videos. But you may have never heard of the app's creator, ByteDance, a Chinese internet company with a lofty $75 billion valuation. In fact, it's the world's most valuable startup. This is the story of how ByteDance achieved extraordinary success in China and how it's pushing to be the next global internet titan. When Zhang Yiming first founded ByteDance, investors doubted the then 29-year-old and his ideas, but Zhang proved them wrong. In just 7 years, the company has evolved into a multifaceted empire spanning about a dozen products available in 150 markets and 75 different languages. Its apps are for everything, from news aggregation and short videos to online education.
Unlike other Chinese companies, it was thinking of expanding overseas relatively early on. The founder, Yiming, was already talking about acquisitions and hiring from overseas places like the US and Europe, just 2.5 to 3 years into his company's lifespan.
ByteDance has created a significant following around the world in the early stage of its international expansion. TikTok, its most popular app abroad, has reached over 1 billion downloads, with about 25% from India and 9% from the US. Even Apple's CEO Tim Cook couldn't resist a visit to the startup's headquarters during a trip to Beijing last year. Its relative success abroad has been partly achieved through smart acquisitions and strategic expansions. ByteDance brought karaoke-style video app Musical.ly in late 2017. Musical.ly was already very popular for teens and younger millennials in the US. The company then merged Musical.ly into TikTok and suddenly had a substantial user base in the US.
it's such popcorn entertainment that you can consume really quickly. You just keep scrolling and you see the next video, and it's just 15 seconds each. And on the other hand, by using their artificial intelligence targeting, they can get you the content that you're most interested in watching and seeing.
ByteDance's success story started with its signature news aggregation app Toutiao in 2012. The app uses AI to aggregate news and videos from tens of thousands of media outlets and then pushes personalized feeds to users. It's similar to Facebook's newsfeed or Apple News.
ByteDance uses its AI engineers and AI engines to serve content you want to see straight away. So the idea is that the more you use it, the better it learns about your habits and your personality, and the better suited the article becomes for you. And then that becomes an addictive experience.
But not everybody was happy about Toutiao's business practices, especially publishers who felt their original content was stolen by the news aggregator. After a flurry of copyright lawsuits from newspapers, Zhang negotiated deals with media partners to share revenue. Today, Toutiao has become one of the most popular news services anywhere, with more than 700 million registered users. What's remarkable is that Zhang and ByteDance managed to create such hugely popular apps like Toutiao and TikTok without backing from China's internet giants, Baidu, Alibaba, and Tencent, also collectively known as BAT. In fact, it often found itself at war with the three giants.
If you're not backed by BAT, it's very difficult to survive as an internet unicorn in China. In many ways, ByteDance survived by being underestimated by other Chinese internet giants.
The challenge now is how ByteDance can keep its momentum while facing intense competition from local and international players. Its main revenue comes from ad sales, but the company barely met its 2018 revenue target amid a slower Chinese economy. ByteDance also faces regulatory issues at home and abroad. Last April, ByteDance had to shut down a popular joke-sharing app in China. Its bread and butter, Toutiao and Douyin, was also suspended by the Chinese government around the same time. Content is also a risky venture in its overseas markets like the US. In February, TikTok had to pay a record $5.7 million to settle claims by the US government that it illegally collected personal information from children. And so ByteDance's ambition to be a global internet titan might mean a tough road ahead.
Coming up, FANG stocks have already seen double-digit gains so far this year. So will the next round of earnings push sentiment even higher? We will discuss next. This is Bloomberg. More startups are rushing to the public markets in what's turning into a very busy year for IPOs. Beyond Meat, the maker of vegan chicken and beef substitutes, is seeking to raise as much as $184 million in its initial public offering, according to regulatory filings. Investors include Bill Gates and actor Leonardo DiCaprio, as well as former McDonald's CEO Don Thompson. Meantime, Douyin, a Tencent-backed live streaming platform, also filed for a U.S. IPO seeking to list on the New York Stock Exchange. The company plans to use proceeds to invest in esports content, R&D, and marketing. Meantime, we've got a lot of big tech earnings on tap this week, starting with Twitter and Snap Tuesday, but also including Facebook and Amazon later in the week. So, what are investors looking for? Joining us now, Bloomberg Tech editor Alistair Barr. So Twitter first, coming up Tuesday morning. What are you expecting?
I think they all have a lot to live up to because all the shares have rebounded after the swoon last year. Twitter specifically, they had this new metric which is monetizable monthly users, which is just basically the result of them having to clear off all these fake bots.
We just need all the acronyms to get longer and longer.
But there, I think people are going to be looking for at least that number to not be falling quite a lot. They already warned that the number would go down, so if it's a stable number, I think that would be really good for Twitter.
You mentioned the run-up over the last few months. I have a chart in my Bloomberg library which shows the NASDAQ Tech Index over the last 4 months, and you can clearly see on the way up. What about Snap?
So Snap had a terrible year last year, but it's more than doubled this year, which is pretty incredible. Last year they had a really bad launch of an Android app. They've fixed that and re-released it, and that's pretty good. And they're trying some new things, like, for instance, some games that are going to be a gaming platform, and some games that they've actually developed themselves. And that type of thing is all about engagement for Snap. If they can get young people playing games as well as sending people messages, that'll be good for their engagement. And over time, the bet is that they'll be able to sell ads and actually make some money.
And of course, Facebook, with all its controversies.
Yeah, I mean, Facebook's been the Teflon stock of this year so far. It's up, I think, 37% this year.
After a huge drop last year.
After a massive drop last year. But again, this is, you know, a lot of their privacy slip-ups and some of the regulation that's already happened, it hasn't undermined their main business, which is, you know, when you go on to check things about your friend, you see an ad, they make money, that's still humming along, and it seems like nothing they can do, no mistake they can do will upend that until somebody comes up with some really serious regulation.
All right, so outside of social media, how about Amazon?
So Amazon's had some hiccups lately, and that there's some signs that they've been cutting some costs. The one that I would point you to is the India hiccup. This is a classic Jeff Bezos plan. He's in India for years. He's spending vast amounts of money, and the government there just banned them from owning a majority stake in any of the merchants that sell stuff on their marketplace in India.
Why?
I think it's related to what Elizabeth Warren's been talking about, which is this idea that really you shouldn't compete against other merchants. So basically, Amazon did own a majority stake in a big seller on its marketplace in India. It was banned from doing that. They had to pull a load of listings off the marketplace almost immediately, and they had to sell a stake. So that type of thing, you know, any type of thing in a high growth market like that might be a problem for their revenue number.
All right, well, you and we will be all over it. Lots of news coming this week. Thanks so much, Alistair Barr. And that does it for this edition of Bloomberg Technology. We're live streaming on Twitter, of course. You can check us out at Technology and follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.